Hello, welcome. This is Seewing Yi from the Yi Real Estate Network, and today's topic is: will there be an epic prehistoric housing inventory shortage looming ahead? Well, let's go over this information and find out. So I'm going to share my screen and here we go. All right. America will have an epic shortage of homes in fourth quarter 2022 or early 2023 and beyond. Well, let's find out. As you can see, there's a supply and demand issue. U.S. homeowners equity surges to $27 trillion and sellers are locked in. 9 out of 10 mortgages have an interest rate below 5%. More than 40% of the homeowners don't even have a mortgage, and homeowners are staying in one place longer. So there you go. I mean, these data are overwhelming. People have a whole bunch of equity in their homes. Very few people are under stressed, right? So they are locked in. They are sitting on their amazing 30-year fixed rate mortgage. Many of them, when they refinance this past year or a couple of years ago, at even less than 3%. So there's no way they're going to get rid of this mortgage asset, if you will. So people have a very little incentive or motivation to sell their home, especially with the looming economic challenges ahead. So, all right. So therefore, sellers are, many of them are beginning to not sell. And of course, the housing recession, right? You know what's the definition of housing recession, which is a new term I have not heard until recently. The media always come up with some new buzzword that creates some fear and doom to the American public out there, and they are creating a new term, housing recession. To me, housing recession just merely means 6 straight months of a low housing sales. If there's a 6 months of a drastic reduction of home sales, that will exacerbate the inventory or lack of homes in the future, right? When sellers are not selling and buyers are not buying, that means you're going to have a very, very low demand whole housing supply for the future. So we have to wait and see. So, like I said, resale listings remain at historical low for the reason I just told you about. And as you can see, in many areas of the country, the monthly supplies are very, very low still, even though we've been hearing the inventory is rising over the past few months. But we need about 6 months of 6 months supply of inventory to achieve a balanced market, and we're nowhere near that at this moment as we speak, as if we're heading toward the fourth quarter of 2022. From the long-term big picture perspective, America is short more than 5 million homes, and builders can't make up the difference. We will talk more about that throughout this presentation in next following slides. Unsold completely new home inventory has been decreasing. Okay, and although we've been hearing that the current new construction of homes that has already been completed, the builders are trying to get rid of them. They are trying to offer, they have even discounted some of their homes of already completed new builds, and they're offering more incentives to homeowners right now. Hopefully more people will qualify, although the demand has subsided pretty drastically ever since the interest rate hike a few months ago, which produced a lot of shock to the American public, from 3% to almost 6% or more these days. So again, the sellers are sitting on their homes. They are wait and see situation, wait and see attitude to determine where the market is going with the inflation, with the interest rate, with a potential recession, et cetera, et cetera, et cetera. So a lot of unsold homes are still or not hitting the market. All right, and then we've been hearing the home builders' optimism are decreasing because of the lower demand. The nation's builders, they are pausing further new construction. They are not creating the permits. So this one sign that could trigger a long-term adverse effect in terms of available new builds inventory for the foreseeable future. So let's keep a tab on this. The builders are not confident. The builders, they built homes based on the perceived housing demand. Since the demand has drastically been reduced due to the interest rate hike and the 40-year low of home affordability because of skyrocketing home prices and high interest rate, and only a mere 4 months has created a 50% higher increase in a monthly mortgage from 3% to 6%. So we've been hearing about that, right? So builders not helping out with the inventory for the foreseeable future. And of course, the National Association of Home Builders CEO Jerry Howard sentiment that fact about a month ago, what he said, the building industry are pausing further new construction. So that could have a long-term or even a short-term consequence on available new inventory coming up in the next 12 to 24 months or even sooner. We are already short 1.7 million homes on a year-to-year basis. And we need about 15.5 million homes to be built over the next 10 years. So you see the long-term ramifications. I know a lot of you are thinking, a lot of you are overwhelmed and paralyzed by short-term real estate information, housing, up and down volatility, and all those real-time news. I mean, it's really overwhelming. This is a short-term reset, right, in the housing market nationwide. But long-term, what's happening right now, the trends, and I'm tracking these kind of trends, could have a long-lasting effect on housing for years to come. I say it again, what's happening right now, this year, 2022, in my estimation, in my research, potentially indicate there's some further challenges long-term. A lot of people not even think about because people are just paralyzed with so much negative information going on in the housing market right now. So people have this short-term vision. They just can't think beyond what's going on right now. Okay, just people are paralyzed. Have a short-term vision, short-term tunnel. If you can use it, tunnel vision, if you will, right? Again, although we have seen rising inventory in many markets in the country, as of June, the inventory is still at a fairly low 2.5% supply, which is still very much a seller's market overall in the country. Okay, we need about 4 to 6 months of inventory to achieve a resemblance of a healthy, balanced market equilibrium. Agree? And then Alto's research and the most recent data, I believe, month ending July, clearly indicate that, as you can see, this trend line, right now we are at, as we approaching the fourth quarter 2022, the inventory has declined to like 500,000 homes that are sold. Okay, and we need, like I said, we need 1.5 million at least. So we are only we need what, 300% more homes to be sold in order to achieve a balanced market. This is not happening, right? If you look at the 2016, we were at 1.2 million homes, and we are up until 1 million homes until the pandemic, right? 2020. Then during the last 2 years of we have seen like 500,000 homes. So the last 2 years, we have seen very extreme low supply, historic low supply of homes, and huge demand due to the record setting interest rate low. Now that the interest rate has increased 100% to 6%, and so sellers not selling, builders not building enough, so we are at a very low inventory, believe it or not. So we have to keep watch at this. We're going to end the year still at a very low inventory, contrary to what we've been hearing recently. All right, so we have to keep tab of this. Again, the active inventory and projected single-family home, according to Alto's research, not doing well, right? Back in 2018, rising rates led to a slightly more inventory. However, in 2021, extremely low inventory in 2021, and then by the end of 2022 this year, again, there will be like $500,000 homes, $500,000 homes are projected to be sold, and that's far short of the 1.5 million that are needed for this year. So this trend line by Alto's research clearly see a very troubling trend. Medium home list prices, single family homes only, has skyrocketed to 440K, right? Because before the pandemic, we were around $300,000. So this skyrocketing prices and the high interest rate has prevented a lot of people from buying homes and causing a 40-year low home affordability factor and a pushback of demand. All right, so as you can see right here, the weekly new inventory single family residential, again, we'll see some decrease of new listings. I've been, for those of you who've been following my YouTube channel, I've been going over many cities and metros in terms of their market update. So continue to watch my weekly nationwide specific metro updates. Okay, and so new listing has been slowed down for the past few months. So this is a very disturbing trend. As a matter of fact, will further create a lower inventory than we have seen so far, according to Alto's research. All right, as you can see down here, see low continue. The listings has been decreasing for the past few months. Let's see how this trend will continue. And then as we segue into the Redfin data, new listings for all metros throughout the country, as you can see right here, it has decreased, quite significantly. The trend line over here, like a few months ago, down here. So we're getting fewer and fewer listings throughout the whole country, according to Redfin. And if this trend line continues by the end of this year and beginning of 2023, we may see a further drastic reduction of listings coming to the market. So, all right. And weeks of supply, again, I mentioned 4 to 6 months is a balanced market where we have, as you can see right here, the nationwide weeks of supply is 11.6 weeks. So 4 weeks per month divided by 11, we are at a little bit less than 3 months of inventory. Okay, we are still in a seller's market at 3 months inventory. I know each metro is different, each city, each location is different, but Redfin track nationwide, and we'll see how this trend. But for the past 3 or 4 months, the inventory has been increasing, right, nationwide in terms of supply of inventory. But we still have 4 months left: September, October, November, December. We'll see. But based on the active listings, I just show you on the previous slide, if the active listings are decreasing, it has to result in decreasing weeks of supply. So this trend line, in my estimation, could be decreasing in the next few months. So I'm going to monitor this data and I will produce more videos on a week-to-week basis to determine how this trend line will end up for the rest of this year and beyond. So, therefore, I expect the weekly supply to decrease, not increasing as we're seeing here. So we'll see. At the Redfin weekly housing market data, again, active listings, right? We have 846,000 active listings nationwide, and it remains to be seen. What I've seen so far on my research in that many of the metros that we're seeing less pending sales month over month in many markets, even though the active listings has increased up until a couple of months ago, right? Then you will see the trend line decreasing. So we're seeing active listings decreasing. This means that the sellers are not selling as much as they would like. As I mentioned earlier, many sellers have no incentive or motivation to sell. They're sitting on an amazing fixed rate mortgage, which is historic, really record historic all time. And then, so the trend is going under. So yeah, inventory is getting less and less moving forward based on this trend line with active listings for all metros, all 400 metros that are tracked by Redfin. And then all this still right now, I'm sure you agree that even though demand is not as great as before, we're still seeing moderate demand, and the supply is still below the balance method. So the supply is still low relative to demand, even as we speak right now in September 2022. So therefore, if demand exceeds supply, we will expect housing prices to increase. All right. For those your doom and gloomers thinking there will be a crash, well, you need to think again. We expect at this moment in time, unless something drastic happens, the housing price increase will be probably at a single digit level, 3-6%, somewhere around that range, at least for the short term, at least for the next, who knows, for the next 6 to 12 months. And beyond that is anybody's guess. But the big picture is there's a lot of people will still stay in the sideline, right? A lot of people have the money, believe it or not, because during the pandemic, people saved a lot of money. During the pandemic, there's so much multiple offers, so much bidding wars that caused a lot of people to stay in the sideline. People have go to a wait and see attitude. This year, 2022, is a year of the reset, the year of the slight correction. People just wait and see how the economy, how the recession, how the interest rate will play out, right? And then a lot of people sitting on the sidelines have the ability, have the credit, have the money to pull the trigger if and when situation improves, such as if the interest rate decrease from the current 5 to 6% to like 4%, watch out. You know, we may see another interesting situation coming up. So at the end of the day, we're still seeing the millennials, age 30 to age 40, which is 82 million millennials. They are their peak housing purchase years, right? So think about that. There are a lot more millennials, 82 million out there that still want to buy a house. So they're just waiting on the sideline, ready to pull the trigger when the situation improves. And then you still have baby boomers, 68 million, that still are buying second homes, vacation homes. And although they have, many of them are, they have downsized, if you will. And who knows, the Gen Z right now, they are like in their early 20s. There are 86 million Gen Zs in about, at the end of this decade, which is 8 more years, they will turn age 30, the Gen Zs. So you may have a new generation of potential home buyers, all 86 million of them, coupled with the existing 82 million of millennials that in a prime earning year. So long term, I should see there still will be a high demand of interest of home buying. And as I mentioned earlier, the home builders are pushing back on their construction timelines. And then the reseller, the sellers right now are sitting fat and pretty because of their 30-year fixed rate mortgage of way less than 5%. So here's my takeaway, right? So here's my takeaway. The future will be very interesting. So I'm going to ask viewers out there, please feel free to make a comment below about what do you think of the data I just provided you. Feel free to comment, and I more often times I will answer your comments on these at the bottom. And also, if you feel if you see value in this presentation, please click the like button and to increase my YouTube channel visibility, and also subscribe to my channel. Every week, several times a week, you will receive great real-time important real estate data that will help you become educate you and allow to help you make you informed about the real data and not all those clickbait YouTube providers out there that use a C word to get more viewers. So anyway, and also finally, feel free to subscribe your email into my website database. You can become a free member of my real estate community, and as a free member of you will receive a weekly newsletters through your email on very interesting and attractive real estate investment opportunities in nationwide, specifically the best affordable markets where you can achieve cash flow. If you're an investor, if you are a primary home buyers, want to buy in different markets, I have a network of loan agents in many markets throughout the country to help you to buy primary homes. And as an investor, we have off-market turnkey cash flow properties in the best affordable markets in the country. Turnkey, everything done for you, one-stop shop. Thank you so much. This is Seewing Yi from the Yi Real Estate Network. Thanks for watching. Have a nice day. I'll see you on the next video. Bye-bye.